right, we'll start. So, I don't know if you guys heard us introducing ourselves, but Valerie and I are both partners in the owner finance company. We also have one other partner, Mark. And we started in November of 2019, and basically we're here to help buyers who can't qualify for traditional lending. Our buyers fall into a lot of different categories, which we'll go over, and we're gonna kind of break down just how our process works step by step for realtors, from the very get-go of filling out the application all the way to the closing table. There's a few moving parts, you know, because we do have investors that get involved and we get involved in the purchase as well. So we'll walk you guys through all of that. This is typically a very interactive presentation. So if you have questions, feel free to ask us during. If not, we'll most likely cover them as we go through most of the slides. So just stop us if we go too fast.
So we're basically just a real estate company. We work with investors, buyers, and realtors. So buyers who can't qualify for traditional financing, and then we have an investor side of the program, which is basically the way that we facilitate most of our deals. And a few different things about us, and maybe some other owner finance companies out there that you might know. We have no application fees to get pre-approved with us. So it's a short 3-page application. No fees until you have an actual executed contract and you're ready to move forward on an executed contract. Basically, our buyers choose the home and we buy it for them. So we're all over the state of Texas. Hopefully by, I don't know, summertime or the end of this year, at least for sure, we'll be moved into Florida. But for now, we're just all over the state of Texas. No restrictions on that. You know, we can do rural properties, really just anywhere as long as it's within the state. We don't raise the purchase price. So from the time you guys get it under contract for your end buyer and assign it to us, and then, you know, we owner finance it back, throughout that whole process, whatever you guys negotiate on the contract as far as price, credits, any of that, it stays the same throughout our whole entire process all the way to the end buyer. The deed is the buyer's the day that we close, the day that we do the closing. We do record with the county within 30 days. So no rentals or anything like that. They do own the home the day that we close. And then we work with all sorts of buyers. I mean, anything under the sun you can think of. A lot of foreign nationals, a lot of self-employed, a lot of I-10 buyers, bad credit, no credit, judgments, really cash buyers, really anything under the sun that you can think of. We haven't had a situation yet that we actually had to turn down a buyer. So yeah,
We can get creative.
Yeah, we're definitely creative.
Yeah, we remember that word in the 90s.
It's coming back. So the only qualifications for your buyers that we need is a valid ID or passport, and that can be from any country. They'll need that at the closing tables to make sure that the notary can identify who they are. And then proof of funds. They don't have to be seasoned or sourced. You know, they can be 401k funds, anything that's liquidable. It can be cash, it can be gifted. If it is cash, we do ask that they just, you know, put it in money bins or have stacks when they're sending in their photos so that we can verify how much it is. But that is acceptable. Our general criteria is 200 to 350. We do houses outside of that all day long, especially above it. The reason for that particular criteria is for promotions. So sometimes we'll have, you know, 10% down for our buyers if we're working with programs that allow that. So anytime there's a promotion going on, just know that it falls within that purchase price criteria. Outside of that criteria is 5% more towards the down payment. So if it's $375,000, they're going to need to put 20% down payment instead of 15% down payment. But those are the only qualifications, and once we get those 3 things, we can get you guys a pre-approval and they can go shopping for any home in the state of Texas.
Our application is just a 3-page application. First page goes over just their information. Second page is all of our rates, terms, and requirements, and then third page is an overview of our process. So after this, we can send that to you guys, but for buyers or realtors, anybody just wanting to get a little bit familiar with our program, that 3-page application is the best place. Like, it'll basically answer any of the questions that you want answered up front.
So, so is your pre-qualification a finished product, or are you all gonna go through some more extensive underwriting?
We will go through an RMLO, which we'll talk about.
Okay.
But this, once they get pre-approved, they're final approved with us. We've never had a buyer that we had to turn down.
Okay, so you all are not looking at credit at all?
We
Or
do, their
you
credit
consider
does, we do not consider credit when qualifying them, no.
Oh, okay.
It does get pulled, but no, we
Okay.
don't.
So you saying 2,000 to 350?
200, yeah.
Yeah,
200.
we'll get into that.
200,000 to 350 is the,
That's the general criteria, so that's 23% down, and we'll break that down in the next slide.
23% down.
No, 23 total.
Yeah, we'll break.
It'll be 23 total. So that 23% includes 15% down payment. We charge 5% loan origination, and then we estimate closing cost at 3%. So that's where the 23 is made up of. And then it jumps to 28 if it's outside that purchase price of 200 to 350.
Yeah.
Okay,
We'll break that down again for you guys
Okay.
too.
alright.
Just our general rates, terms and fees, our interest rate is 10.9% across the board. That's just our rate. It doesn't go higher or lower based on, how much they're putting down or their credit or anything like that. It's just, all of them are 10.9% across the board. All 30-year fixed. Our fees, the way that we make our money is the 5% loan origination that's charged. That's how we make our money. For our interest rate, we pay our investors 10%. So we don't really make money on that spread. I mean, 0.9 of it we do, but the bulk of how we make our money is our 5% loan origination. So that's why that's broken down and included in their pre-approval proof of funds. And then no prepayment penalties, so they can sell, refi anytime that they'd like on that. No fees associated with that, no prepayment penalties, no fees if they were to sell and make a profit, nothing like that. It's just no prepayment penalties across the board.
And one other thing about our interest rate is we've only raised it once. So that is something to consider as the market has raised it multiple times. We were at 9.9 for until January of 2020.
Last year.
Yeah, 2022. Then we changed it to 10.9. So we've only gone up 1 point. And as the market changes, we hope to be able to adjust to go back down as well. But we try to keep it steady so we don't change every time the market does. That's something you guys can definitely count on to be consistent. The funds needed to qualify, this is gonna break down that 23 to 28%. So here's an example of a $200,000 purchase price, 15% at 3% estimated closing costs and our 5%. So they would need 46,000 total proof of funds. And so as they can show us that with their valid ID and passport, they're approved. So that's how that breaks down. We estimate the closing cost at 3%. Granted, that can be a little higher or lower depending on what you guys negotiate on the contract. If you do seller contributions, that's gonna go down. If there's anything negotiated on that as far as the closing costs are concerned, that can change. We do have a maximum of 2% that the sellers can contribute for the investment loans that we're getting, so do keep that in mind. If the sellers want to do something outside of closing to help your buyers, we're fine with that, but with the lender, we'll only be able to accept 2%. So that's how it would break down for the 23% proof of funds on something that falls in our general criteria.
Yeah, so once they get their loan estimate for that 23%, the loan estimate will be pretty close. The only thing that changes throughout the process is gonna be just that 3%. So the 15 stays the same, the 5, just the 3% is the part that can change.
So that 2% seller contribution limit, is that a requirement for you guys, or is that a requirement for who's providing?
It's the lender, it's the type of loan.
Yeah.
So these are investment loans, so the investors cannot get like a primary residence loan. It has to be an investment loan because they're not living in it. RMLO, and that's when they start underwriting. They'll pull their credit, they'll ask them for, it's like 6 or 7 items. It's very small. The RMLO makes some recommendations. She knows we're gonna move forward no matter what, so she just makes sure that that they can make the monthly payment. That's really the only thing. So during that underwriting process, the appraisal will be ordered. We take care of all that. We pay for the appraisal, and then we'll charge our buyer on their closing disclosure. And then, of course, the insurance. We have to have homeowners insurance. So we worked tirelessly for 3 years trying to figure out the best way to do this, because there are insurance carriers that do not accept the owner financing arrangement. Buyers call in, they can't get their claim covered because of it. So we found a team, there's a lot of goosehead teams, but we found one. We work with Tom Stinson's team out in the Woodlands, and they have vetted very carefully a list of carriers that do satisfy that. those requirements, and they will cover the claim even though it's an owner finance wrapped around mortgage. And that was hard to find, but we haven't had any issues since we found that. And so in this case, they will get a list of quotes to choose from. If they want to use someone else, they need to bring that quote, and so that we can discuss with them, or Goosehead can, the differences, and say, hey, you may be paying less, but you don't have water damage. If you file a claim, they're not going to cover it because there's additional liens on the property. So they're really good at explaining that to your buyers, but it is mandatory that they go through them and pick one of the policies. So I think that's that part.
So that
and
means they have an escrow. So that means
Yes.
that they're required to have, to carry an escrow.
We escrow
Okay.
for taxes and insurance, yes
Okay.
ma'am. And so when we open file with the RMLO, that's now a new expense that we have with that company. So we take a second $5,000 deposit. So now your buyers are $10,000 in, and that's all the money that they're going to be giving until their cash to close them out. So when they get their closing disclosure, they'll have $10,000 worth of deposits on there. So some of our buyers like to do it all at once to avoid, wire fees or things like that. It happens really fast. Their first 5 and their second 5 is like a week apart. So, especially our like serious buyers, they just do the 10 at the beginning, so they can do that if your buyers want. That's an option for them.
And then just moving on to the RMLO process for the end buyer. Once we have that real estate sales contract executed, we submit that to our RMLO. Same thing as any RMLO. I mean, she's going to ask for some additional items. She's going to pull their credit. Basically just gets as much information as she can from the buyer. It's also important for the buyer. She's going to send them a loan estimate. So the same way any traditional mortgage company sends out, they're going to receive that exact same loan estimate with everything itemized out on there for them. That'll be the first thing that they receive, as well
the
as
rest of the package.
Right, with all the
Basically.
disclosures.
Yeah, basically, and a bunch of disclosures and things like that. So they'll receive that. They'll have to DocuSign all of that. Our RMLO will work hand in hand, and our transaction coordinators with the buyers, just to help them if they're having issues with what to submit and things like that. The main thing that our RMLO is looking for is just, like she said, ability to make the monthly payment. We also can get very creative on those things as well. There have been instances that we asked, for them to add a co-borrower, like if their DTI was like 75, 100%, we'll maybe ask for a co-borrower. We do have ways of getting creative to help our buyers move forward, but that's gonna be the main thing that the RMLO does. Then she'll just gather everything. She'll basically say, hey, here's my recommendation, and then we say, we'd like to move forward.
So what is the DTI guidelines?
Well, so we don't have to actually like apply the true DTI guidelines. We stay compliant with what is considered really to just make sure we're not being predatory and things like that, which is around that 75%, once you start getting above that is when you need to start like asking for a co-borrower or asking for additional places to make sure that they can make the monthly payment
So
and
y'all
stuff
go
like
to
that.
75%.
I mean, we don't actually have like a technical count.
Okay.
We do everything really one-on-one. Like there's super particular things sometimes about buyers and their situations. Like,
Okay.
I mean, we could write a book about all the different situations, but once it starts getting higher, like above, basically around 75%, no question, whatever, we're pretty good.
Okay.
Once it starts getting a little bit above that or however high above
It's just
that.
if they can't make the monthly payment, if they're bringing in $2,100 a month and their monthly payment is $2,900, then we're like, okay, if we're lending to you knowing you're not going to be able to afford this, and so in those cases, a lot of them are like, well, I get paid in cash, or I cash my checks, I don't trust the bank, and we have quite a few
got a lot
that
of
don't.
people that
Yeah,
don't.
we do.
So
We
in
do.
that case, what they've done is those check cashing places, they do keep a
And
history,
itemized.
Right.
so you can just go get a printout and
Even
send that
Cash
to us.
App.
And
Cash.
whatever,
There's lots of
everything,
things.
everything
Yeah.
has transaction history
Mhm.
that our RMLO will consider and look at.
Okay.
So
Yeah.
Okay.
anything like that we can.
Okay.
So primarily so when Dodd-Frank came out, they didn't make
Oh,
private lending illegal.
Right.
Right.
But there is still.
There's a lot of
Yeah, you
guidelines
have
and
to use an
regulations.
RMLO, you have to
Yeah.
close at an attorney's office
Right.
or a title company.
Correct.
I mean, there's quite a few stipulations, which we worked hand in hand with our RMLO. She went to Austin, got all the details. We had a meeting. She came back, said, you guys are doing everything except this one disclosure
Right.
with the lien. We're like, oh no, we do that. And so
Mhm.
it's just making sure you disclose that there's additional lien holders
Yeah.
and
That's right.
you let them know how to contact them and you service the loan
Insurance,
correctly,
it's-
have
there's-
insurance,
yeah.
and we do all of those things. So we've definitely made sure when that Senate 43 bill passed that we were compliant with all of the new guidelines.
Even if you don't have to be.
Even if we don't have to be,
Yeah.
because technically as a private lender, we could write our own guidelines.
Yep.
But that's where you start to, really operate in
Yeah.
something further
That
than the
red,
gray.
that red
Yeah.
zone
In the
right
red
there.
zone. Well, and
Yeah.
also you create a massive amount of problems for
Right.
the future. So
Right.
you may close 20 deals this month, but how many of those are going to
I'm gonna-
close?
Right.
Right.
And so we're not looking to put our buyers or our investors or ourselves in those types of situations. We want to help the industry thrive and not make it worse. So that's one of the reasons we make those guidelines our guidelines, just to make sure that we're more than protected, and so are our buyers and investors.
Mhm.
Sounds good.
So just a little bit of details on the investor CD. We get that it's the same time for the periods that you have to wait, the mandatory 3-day and 7 days. We do the same exact thing. So the second we get the investors final CD, we take that and balance it with our buyers. So the buyer loans.
Gotcha.
So this is just beginning of the buyer's process. This is also on page 3 of the pre-approval application for your buyers. So pre-approval, once they submit all their items, we can get them a pre-approval letter in about, usually same day, 24 to 48 hours. You can get their application on our website at theownerfinancecompany.com, or we can email it to you. They can fill it out online if they'd like, or send it in and email it to you. And then we'll get them a pre-approval letter. Once they have their pre-approval letter, you guys can go home shopping. And again, any home in the state of Texas, you will put the actual offer in the end buyer's name. Like, you'll use their pre-approval letter, you'll put the offer in their name. We do have a couple one-offs to that. If it's a new build, those are usually one-offs because they don't like to do name change amendments. So typically for new builds, we'll work directly with an investor. So a few situations, like the super high purchase prices, a lot of times they like to do it directly in the investor. So a few one-offs with that little part of the process may be different, but generally speaking, you guys are going to get the home under contract, fully executed in your buyer's name. Then you will bring that contract to us. Your buyer will need to do a $5,000 non-refundable deposit. As soon as we have both of those things, we will send the deal out to one of our investors. All of our investors are pre-approved, they're ready to go. They know that, the clock is ticking toward that 30-day close date. So as soon as we get that, we'll send it out to our investor. Once we've got an investor assigned, then we will let you guys know, and at that time you can facilitate either a name change amendment. A lot of our lenders take name change amendments, or in some cases you might have to write a new contract. We used to be able to do assignment contracts, but underwriting guidelines just across the board have gotten so strict on that. Like, we can't really
We
do
basically
assignment
deleted that
contracts
from
anymore.
our process.
Yeah, we basically deleted that from the process. One thing to note, so the $5,000 non-refundable deposit, that is to the owner finance company. The earnest money is going to be separate than that. They will put the earnest money down with title. I see your face. What's your question?
Yeah.
Yeah.
Yeah, because I got a question too.
Yeah,
go
so
ahead.
the non-refundable deposit, that goes toward their closing funds. That's not an additional deposit. That'll be itemized on their loan estimate when they first get it. Any deposits that they do with us does go toward their closing costs and their down payment. But they will have to make a $5,000 deposit to us, then the earnest money at the title company. When we assign that contract to an investor, the title company is going to turn around and release the earnest money back to the buyer, and our investor will have to put it down. So a lot of moving parts that happen in that part of the process. Our transaction coordinators handle all of that. They walk, our realtors, title, our investors, our buyers through everything. So you guys don't have to, worry about getting lost and all that. Our transaction coordinators are very hands-on, but they will have to do that, and then title will release their earnest money back to them.
So the
Once
earnest
the
money
investor
gets
puts it down.
released back,
Mhm.
once they get it from the investor.
Correct.
Okay.
Yeah.
Okay,
Typically, they have to release it first because they can't hold two.
right.
Yeah.
But our transaction coordinator, like, she'll send an email introducing who we are. We represent the new investor, what we need them to do, and so it's all. And you guys are on every single email.
So
from the
they'll
very
get the
start.
earnest money back in their, on the settlement statement.
They'll get it back before that. It
Okay.
won't actually be on their settlement.
Okay.
statement.
It'll be released back. So by the time the investor closes, they'll already have the funds
I
back
gotcha.
in their account.
Okay.
Yeah.
Alright.
So I have, two questions.
Sure.
One is going back to the contract being submitted. So have you all had either agents or buyers have a problem with submitting contracts, which I assume is your pre-qualification letter,
Mm-hmm.
because of the terms that's on your pre-qualification letter?
No, because the terms that are on our pre-qualification letter, I mean, it's the 15% down that they're putting. It's going to be the same offer. I
Okay.
mean, really, it's going to be 20 once it gets to the investor, 20% down. All of our investors get 20% down loans, so it's going to be or 15 with our
Yeah.
85% LTV program. So whatever's on that pre-qual letter is going to be the same or more for the investor. So no, we don't typically have problems with that. Usually our listing agents, we encourage you guys to like talk to the listing agents about it and have them call us, from the very get-go, to discuss the pre-qual letter, and that way we can just educate them a little bit on our program. And we like to be really transparent up front for like exactly what we're doing. We want them to realize that, hey, this is an investor, it's a very strong offer for them. So we want them to know that, and we want them to know like there's gonna be some changes. We just want them to feel comfortable and know that like if an amendment comes down the pipeline or something like that, they're not taken off guard. So we definitely encourage you guys, like if you have a listing agent that is worried or has never heard of owner financing or just whatever the case may be, definitely have them call us, from the beginning so that we can educate them on our program.
And our lender will also stay involved. So she will once you're the new buyer, all of the emails that she sends to you as the new buyer, she'll keep the listing agent informed like the whole way through on the status of the loan, how many conditions our investor has left, true estimated clear to close dates and timeframes. She's really good at just staying on target and being communicative with everyone, including the listing agents, which has been really helpful.
So the second question I have is the once the buyer puts down the $5,000, which is non-refundable, what has ever happened once that has taken place to where they can't go to close?
If it's a
They
buyer
back
reason, like if they back out for
Yeah.
some reason, they lose it. If
Right.
it's on our side, like our investor, something happened during the loan process and he wasn't able to meet, the terms or the requirements, then we refund it or they can move it to another property.
Okay.
The only reason that it's non-refundable is if, we're halfway through the loan process,
Right.
they spent the rest of their cash to close and they're
Right.
like, I changed my mind, I want my money back.
Right, you're
That's
gonna-
not gonna,
Yeah.
Right.
because we've already put a lot of
Right.
like money and time
Yes,
into
right,
the
yeah.
deal at that point, appraisal's been ordered, things like that.
Okay. And
But
then-
I mean, to me, the $5,000 means you pretty much guaranteed
Right,
on you all's end that it'll go through.
yeah, we don't
Yeah,
take that
absolutely.
seriously,
Yeah,
yes,
I got it.
correct.
That
There,
makes sense.
like literally in the 3 years we've been in business, there's been like 2 times that something happened with an investor. One of them was not that long ago. It's just underwriting guidelines change sometimes
Yes.
even while they're in the loan process. And so we had a couple crazy things happen. In those cases, what we'll try to do, of course, is to negotiate with the seller. We'll put down the additional earnest money. We don't ask our buyers to do that. We'll step in, we'll try to put down additional money, try to buy some time to move it to a different investor, whatever we have to do. So just so you guys know, like we'll definitely exhaust all efforts on our end for what we need to do, with the seller to try to rectify everything. I mean, the last thing we ever want to do with anyone involved is lose a deal. So, those situations are very rare and few and far between, but we have had them happen.
Okay. And then my last question was gonna be, we were talking about the contribution of the 5,000, which, if I'm correct, I heard you say the 5,000 is actually coming out of the 3%. Is that correct?
Yeah, everything will
Okay.
get credited. Mhm.
So the 15%, all of the 15% is going in as equity.
As,
Well,
yes,
correct.
down payment.
Correct.
All right.
And if it's the additional 5, that also goes towards that never
Right.
goes towards our fees. Any additional money we ever ask for does not go towards our company at least.
To our fees, yeah, it'll go toward the equity of the house.
So as our investor is going through his underwriting process with the lender, the buyer will also be going through an underwriting process. So we will do a real estate sales contract with your buyer, and that's where we sell the house to them. And it's not TREC, we use what's just called a real estate sales contract. That'll outline the same terms that, that we agreed upon. It has a cash transactions, we do charge 1% fee. If they want to do smaller increments throughout the loan process, we won't charge them for that. But if they bring the whole, however much it might be to close, we get charged from our bank for depositing big amounts, so we will charge a 1% fee if it's a lump sum.
And then we do use a third-party loan servicer on every single file. So that'll be the next thing that happens to the buyer once closing is completed and done. We basically send the whole file to our loan servicer, and our loan servicer will open file. They'll fill out loan servicing paperwork during closing. That'll be part of their closing paperwork. And then once they've closed to the date that their first payment is made, the loan servicer will contact them. They'll also be responsible for sending their mortgage statements if they want to make any changes to like the bank that they're using to make their monthly payments they can. That's basically who they will communicate with once the loan is closed. They won't call us at that point anymore for anything. They'll communicate directly with our loan servicer. Our loan servicer basically handles everything from that point, including all of the escrows for taxes and insurance and everything like that. They'll receive an escrow analysis every year, same way as other mortgage companies do it. They'll receive all that. So your buyers also they can opt out if they want. Our loan servicer does report to a few of the major credit bureaus. So their payment history, if they don't want it reported, that's fine. They don't have to, but our loan servicer does do that. So if you do have some clients that have bad credit and they're mainly just working on their credit to be able to refi out, our loan servicers will report. So that's a good benefit for them.
Is there a buyer side fee for the loan servicing?
It's $25 a month, and it is going to be included in their monthly payment.
Okay.
And that'll be itemized from the very beginning on their loan estimate. When they see it, they'll see the P&I, and then they'll see like their taxes as SecureNet Loan Servicing is their name. They're out of San Antonio. They've been with us since the beginning now, but yes, it is a $25 monthly fee that will be
Are they
included.
charging on your side too?
We pay a $150 setup fee.
Okay.
That's actually part of the closing cost, but yeah, $150 setup fee, and then it's the $25 monthly.
I think you did mention it, but if I didn't hear you, and if they want to put more towards their principal,
Oh no, I didn't.
they can contact SecureNet and bring that loan amount down.
Yeah.
So these are the 3 closings that take place. You guys do not need to be at the first and second one. We encourage you to be at your buyers. They do always have more fun and feel comfortable when you guys are there for the 3rd closing. But the first closing will be the title company. Most of our investors are kind of all over the place, all over the state of Texas and in other countries. So they do mobile notaries. They don't really go to the title company unless it's just super convenient. So we don't go to those closings either. And then the second closing is when the investor sells the property to us, and then the third one, of course, is when we do the closing with your buyer. That is done at our attorney's office. At the moment, we are working with possibly moving that to a title company in the near future, but for now it's done at our attorney's office with our notary and our attorney. Our notary is bilingual, our transaction coordinators are bilingual, our SecureNet team is bilingual, our RMLO team is not bilingual, but our transaction coordinators work with the buyers to get them what they need, and all the translation of emails.
Really need to communicate
Right.
with the, with the
Right.
buyer that much.
She does send out, stuff, but it's translatable. So if you guys have Spanish speaking buyers, we can walk them through the entire process. So those are the 3 closings. We're located in Stafford, so you guys know we're at 5090 Corporate Drive. We're currently shopping for a bigger space because we're growing. Really excited about that. So if that changes, we'll be sure to send out a newsletter so everybody knows where our new space is. But that's where the 3 closings take place at this time.
And then just a few things to remember. Again, the max seller contribution is that 2% because they're all investment loans. New builds, I kind of mentioned on that a little bit. if you do have a new build, we can definitely work with them. I mean, we've done a lot of new builds. The process will just be a tad bit different in the beginning. Basically putting the contract directly in the investor's name, because new builds take weeks to do name changes, and sometimes they don't even want to accept it. So typically we just do it directly in the investor's name from the beginning, but we work with a lot of new builds.
Which new build? Do you have some specific new builders that you work with now?
I mean, gosh, we've worked with
Lennar, Ian, First American
First
Homes,
American. We've worked Easy
Solutions.
We've worked with all the big ones.
Yeah.
D.R. Horton.
Oh, yeah, we've worked with D.R. Horton.
Mm-hmm. We also work with Open Door. I know, like, sometimes sellers are Open Door. At first, it was really difficult because it was just like talking to nobody.
Yeah,
and
nobody.
Yeah,
it was 800 number.
so hard.
The email was
Yes,
questions
switching,
at.
yeah.
It was
So
very hard.
hard.
But more recently, we've been able to work with actual people at Open Door,
Yeah,
and they
it's been a lot
understand our
easier.
program. And I don't know why that changed, but we have
It's been
contacts there
fine
now, and we've been
lately
able
with
to
Open
work with
Door.
them. So if you run into one of those, it was complicated, but hopefully it stays not complicated.
Yeah.
What about Long Lake?
We can work with any home builder.
Yeah, I mean,
Any home builder. The one thing that's important too for the home builders is they don't like selling to investors because
Right.
they think that it's going to be a rental home.
Rent a home.
Right.
So we, we encourage you guys to to educate them on that it's not. It's going to be a primary residence. It's going to be claimed as a homestead. It's going to be the client will be. Your buyer will be doing the walkthroughs. If they want to
Yeah.
schedule an inspection, they're the ones who
Just
go out
together.
there.
Different
Yeah.
finance.
That's it. But they're making every decision. They'll be signing off on all of it. And technically, our investor will have to sign for walkthroughs and things like that. But you're
Right.
not until your buyer and you guys have
Have
given us the
completed it.
clear on that.
Okay.
Right.
And then all the truck contracts, we require a minimum of 30 days. That's normal. And then we do not lend on commercial properties, raw land, or mobile manufactured homes at this time. The most we go is 4-unit, the 1 to 4 units. Hopefully in the near future we'll be able to do commercial, but at this time we don't.
So what percentage of you all's business goes to end buyers that are homestead buyers versus end buyers that are investors?
Well, every
Yeah.
single property has a buyer that's living in it that picked out the home and an investor. Because we
No, I'm
facilitate.
talking about the actual investor is the buyer. So you all don't do those? You all don't do that?
It's
No.
it's hard to cash flow on a property when the interest rate is 10.9.
We've
do
had a
have
couple.
one.
Right, but you're a finance service.
Mm-hmm.
So I could see where an investor would want to use you to get into the property, and then 6 months later they refinance out since
Yes.
you don't have any penalties.
Right.
Correct.
So you don't have very many investors that actually approach you.
No,
on
Not
that.
a
they don't
lot
want
of
to pay
them.
the 5% loan origination fee,
They
and
also, and putting that much down on a lot of them.
Mhm.
then to turn that around and recoup it as a rental. I mean, I don't even know
It
how
doesn't
long.
make sense.
Yeah.
It
Not to
doesn't
me.
make sense. It really doesn't.
We've had a couple.
Maybe 'cause I'm broke.
They were just random situations, but we have had a couple, but no, we don't see it very often.
Yeah, a
Yeah.
couple people, who wanted to buy it, use it as a rental, but I mean,
We
they
had
have to
somebody- we
really
had
have, the
one
rent
one
rate
before.
doesn't make sense
Right.
then. So if someone's shopping, they're like, why am I going to pay an extra $1,000,
Exactly.
$1,500 for this house? So,
Yeah.
So
yeah, it
you
really
don't-
doesn't work.
You don't do duplexes.
We do.
We do.
Yeah, up to
One-
4 units.
Up to 4 units.
Okay.
Mm-hmm.
Yeah, up to 4 units. And then we do also pay $1,000 referral fee. So if you're not the realtor receiving commission on the deal, we pay $1,000 referral fee for buyers or investors, or both sides of it. So sometimes we pay 2 referral fees on every deal. So if you're a brokerage, any of your realtors under you, you would get that $1,000 referral fee. Or if you guys refer any other realtors that don't know about our program yet, we basically would just need, there's a referred by place on our application. We would need the buyer to put it on there, or send us an email or just something like that, once the file started, so that we can notate it.
I'm referring on. I need to put my name on
Yeah.
all of them.
Yeah.
You'd be surprised how quickly those $1,000
No,
rack
we have a
up.
lot of brokers that we pay a lot of
A
money to.
huge percentage of our business has been referral business, especially with foreign nationals. Like someone buys a home, then they're like, hey, you can use their and their sister and their brother. We bought a whole block for some families, so
So I have-
referrals go a long way with us.
So I have a question. what do you guys do about like appreciation? Do y'all take any, let's say a buyer buys a home and appreciates $20,000?
That's their
That's
appreciation.
their yeah.
They're in the county of record, so if they buy in Harris County or Brooks, it'll say Brooks. That's where I'm from, Brooks County. Fort Bend, wherever, it'll show investor to owner finance company to your buyer. Your buyer gets to claim all of the benefits of appreciation, homestead exemptions. It's all the buyers. I mean,
So the buyer name is on.
the buyer name. Yeah, we
Correct.
record within 30 days, but at that 30-day mark, that's not when it starts. It starts when they sign their documents. So they go based off of the date they sign, they close. So, yeah, they can. I know there's new rules around filing for homestead that are in the buyer's favor right now.
It's just
It changed.
instant.
Yeah, it's instant.
You don't have to wait till next
Right.
year. That's the
And
only
Yeah,
difference.
we
so they
do-
don't either. So it's great.
We do have a company that we work with and that we know of that handles a lot of like homesteads. There's a lot of just like first time home buyers or
Right.
people that just don't really understand the whole homestead situation. So if any of your buyers are curious about that or need help with that or whatever, and it's pretty cheap. I think it's like
Yeah.
$100 or something.
Or protesting,
Or
the
anything like
value
that.
of their house so that they can bring like their taxes down a little bit. We do work with a company that helps with that too. I didn't even know it existed till I used it, and they don't charge you unless they actually can save you. Then they'll charge based on that.
Yeah, but a lot of that's not happening right now.
Yeah,
Well,
but
it's
we,
not,
we,
but it's a
we
good
as
option.
realtors, we can do that too.
Yeah,
That's awesome.
Awesome.
That means you're
Yes.
a good realtor.
that's right. That is
That's
what that
right.
means.
We can do that too and save the clients money.
Yep.
And with the insurance, with your name being on the policy, so it's not going to be any type of issue if, let's say, hurricane come knock the roof off. The
Their
insurance
name is on the policy.
Their
Yeah.
name is
So
on
the way
From
it
the
works is Goosehead will supply underwriting for our investor with his name on it, and then the end buyer will also have a separate document with his name on it, so he can call in at any time, ask questions, make changes, file a claim. It's
Our
truly
Goosehead team is
So they're
also
just like a
bilingual.
silent partner.
They're just like
You're
lender.
investors.
they're
It's
just
like
a
Yeah.
lien
a
holder.
signer.
Yeah.
So
Yeah.
they'll be
Yeah, but
Yeah.
a lot of
Yeah, but I'm
the
just-
owner finance companies that's out there, you can't do that.
Right, that's why
Right.
they have already
That's-
vetted the
the-
gooseneck
The
people.
the investor is on the
Right.
insurance
Right,
policy.
exactly.
Well,
Right.
no. So you have to think about when they're saying investor, that's just another name for the lender in their product.
Correct.
Right.
So in the other instance that you're talking about investors that are actually on deed. That's different.
So the
Well, our
don't
investors
want
are
the deed.
actually on the
Yeah,
deed.
Yeah, that's what I'm saying. Their investors are
Right, but as
Yeah.
as the person
They're-
that's providing the financing for the property, not on deed ownership.
no ownership
No, they
too.
own
Yeah.
Oh, they
Yeah.
are on.
They purchase the home.
Right, but so when you get to the third closing,
Mhm.
the investor is still on deed as
He
owner?
was. He's on record as
He's
an
on
owner.
record.
I'm trying to listen.
But now he's just a lien holder.
Right, so
yeah.
that's what I'm saying.
Yeah, he's
Yeah.
a lien holder.
Okay, so once he's the lien holder, he is just
That's
Like
it.
the
Yeah.
typical
So
lender.
he's
But he-
basically looked at as additional insured, just like
Right,
we are.
additional insured is
interest,
different.
additional insured.
right.
But he's not like the main policy holder because
Absolutely.
he's not the owner. The buyer is.
But
Yeah, so
for
that's the
So
same
what
thing that
happens
happens typically now when your lender asks for your proof of insurance, they get put on that insurance policy as additional lien holder.
But not with a lot of these companies out here. It's it's the actual finance company that's on the insurance.
a lot of them are.
So
Yeah.
in the eyes,
not
it,
the
like
actual
so for
buyer.
the
Yeah, you don't
lender
need
for our
this.
investor.
I hear
Well,
what
this
you're
is the
saying.
only-
Yeah.
This is my first time hearing of. Cooksy, didn't you have an issue with one time y'all did like owner finance, but it was still like in the seller's name?
Well, they
A
because
lot
they
of
don't
companies
record
don't
their
accept
deeds.
it.
So
There's a
well,
lot of reasons that like those issues happen. I mean, for
Right.
a lot of reasons,
Yeah.
like people aren't recording. People,
and that's what you're saying.
Right, yes.
They're still
Yeah.
holding the deed
Right,
and the
yeah.
owner
Yeah.
of record, whereas we do it
Right.
different.
Right.
But yes,
Yeah,
that's
they changed it.
typically
But that
changed.
also speaks to the not Davis Baby, the Dodd-Frank stuff, which is, the way the laws are written now, you shouldn't be trying to do that on all of your loans. Because
Right.
you do put yourself in a position where if somebody sues you, you need to prove
Yes.
how you didn't take advantage of that buyer.
And also,
So
when
once
you're
we
doing it
close-
like that,
Just real quick, so once we close, if I go look at my deed, what names are gonna be on it? The investor that helped me buy the property and the owner?
Just
what will it say? It'll say
our
my
it'll
name.
be us selling it to you as like the
Okay, so it'll say
trustee.
owner file?
Yeah.
Okay.
Right.
Yeah.
We stay in the middle of the transaction so that our investor doesn't have to worry about any of this.
Right.
Okay.
But a lot of times, like Harris County and other counties are even slower. Like
Slow.
it can, if you're going online, it literally we've seen them take a year.
6 months.
No, I'm no
6 months
longer.
to a year,
longer.
yeah.
Yeah.
To have it
Catch up.
updated. There's a way, like if you go to real property records, or like
Well,
We
once
know
you
the
type
tricks
in like the
to
film
find it on
code,
there,
you
but
can find it.
if
Right.
you're just going to HCAD and typing in an address a year later, like
It
don't
may
be
not
surprised
be
if it
found.
still doesn't even say our name.
You
Like
just tell your
Harris
clients,
County
don't
is-
get rid of your documents.
Right.
yeah, and we send them everything. We keep everything on file. Like
And if
They
they
won't.
need those film codes once the deed's recorded, they can request them from us and we can send them to them. So yeah,
Yeah.
and what you were saying, I just want to go back because I think you had a valid point. Like some of those owner financing transactions, they're not giving them the deed, and
Right.
so
Right.
like in 5 years or something, they'll have a balloon payment, and if
Right.
they can't pay off that
They
note,
take the property.
they take the property back, and that's why the Senate 43 bill passed, was to protect buyers from investors taking advantage of them, because they could make thousands and thousands
they never
of
got the
dollars,
deeds,
and they never
gave
owned the
buyers
house. They
deeds.
couldn't do anything to the house because they didn't own it. They couldn't change anything. They didn't have
Which
correct
is why Divvy and
insurance.
all those people, they had to set up in a certain way so that they would be compliant
Correct.
with the federal statutes.
But even
and
with
stuff.
Divvy, you lease for a year, and then
Right.
all those payments that you're making go towards the purchase of your home, which is great that they're doing that. But you still don't own the home until
You buy it.
until a year
Right.
later.
Yeah. when
So
buy-
you're,
Right.
you're still technically renting for an additional year and losing out on all those tax benefits. So
With the insurance too, it can just be really messy because so many carriers do not accept the owner. And insurance agents will tell you, oh, I can do it this way and I can do it. But guess what? When it comes down to a claim, that insurance
Yes.
company is going to look at every single thing and your insurance agent is going to be nowhere to be found. So that's why we're just super, super strict that they do have to go through, Goosehead with us, is because it's taken us years to like get to this point to
And just
finally
protect
make
everyone.
it good for everybody involved.
especially living in Texas, like we can't take that chance. Like we require water damage on every single policy. There's definitely a lot of things that we make sure are on there. And insurance is expensive and taxes are expensive, so we want to make sure we're getting the right policies in place, since the buyers are paying quite a bit for them.
I just have a quick question.
Sure.
Y'all came in late.
Then
So
no questions for you.
What's the down payment?
15% minimum can be as high
15,
as
you said
15.
Okay,
Minimum. If it goes over 350,000, then it's 20% down.
okay, credit score,
Doesn't matter.
doesn't matter. Okay, so it's 15% down, okay, and I heard you said 10.99?
10.9.
If we can get your card,
So
if we
this
can
is
get.
this is the brokers, Andrew and Eddie. They co-brokers.
Hi, nice to
Okay.
meet you guys. Yeah, if we can, we'll send you guys some information. Our pre-approval application has all of that on there. It's just a quick 3-page application. You can find it on our website. We can email it to you, but page 2 has all of that broken down, like exactly what's needed, the breakdown of what's needed for the proof of funds and pre-approval. Super best, easy place that's gonna answer all, like any of your general questions or the buyers like up front.
Yeah. So that's just like our basic
Yeah.
rundown.
And then maybe go to the slide of the next one. No, the
Yes.
next one.
Proof of funds.
This one.
Yeah. So this is an example of a $200,000 purchase price. 15%, 30,000. 5% is our fees, and then we estimate closing costs at 3%. Those could be higher or lower. Typically, they're right about 3% unless you get seller contributions. So that's what makes up the 23% proof of funds. So for this purchase price, they'd have to show us that they have 46,000. That would be how they get pre-qualified with us.
Okay.
2% only.
And then I actually did skip a slide. My finger was going too fast. This is just our contact information. These are our 2 transaction coordinators. We are currently hiring for more. We've had a really busy year starting off, and it's only getting busier. So as our team grows, we will be growing and making sure they're all bilingual as well. But this is Sydney and Janelli. They can walk you guys, your buyers, everybody through the process. That phone number on there is the office number, and you can text it. Your buyers can text. A lot of them do prefer that, so they're really easy to work with, and that's where we're located.
So just to keep it simple, if you have a buyer that's in a situation where they want to move quick, 23% of whatever the purchase price, as long as they have that in proof of funds, y'all gonna do the deal.
Correct.
Yes.
Okay.
You
You
just
got
send
it.
it up.
That's it.
That's it.
That's
That's exactly
That's
right.
it.
That's all you had to say for me.
Yeah.
Do you see a lot of foreign national?
We have
A
a
lot.
lot of foreign
A
nationals.
biggest-
Because we spend all that money.
Yeah. That's a
Most likely
huge
you-
part of our buyers,
Yeah, I know that's
mostly
probably a
foreign
huge
nationals.
part of your
It
buyers.
really is.
A lot of
We have, I
foreign
mean, from everywhere. We have a lot of Nigerian
Right.
buyers. We have France.
Yeah, French buyers.
I mean, you name it, like buyers from everywhere.
Well,
So
we
that's
had,
great.
I'm thinking of, we had a buyer, basically, they were coming in, they were buying a business, so I guess it's the EB5 buyers.
I'm not familiar.
Where they
But,
buying a
you
business,
can get your
you know, the cast
the
and
green
spring.
card.
Okay.
If you're buying
Okay.
So
Like,
he came in from Canada, he's buying a property, so he's actually leasing a property from me now. And what he did, you know, because they didn't have, like, say, per se, a job right now,
Yep.
but he had the cash.
Yep.
So he came in and paid like a year of rent.
Oh, right. Yeah.
That's
Yeah.
nice.
He could definitely use our program.
Mm-hmm.
No problems.
We even had a buyer in Nigeria. So sometimes there's countries that won't release funds to the U.S. unless they're like purchasing a property. So we had a Nigerian buyer. He had millions of dollars in his bank account over there, and he could not get it over here. So we had to provide the bank and the government with like our closing package, our closing disclosure, and then they sent the funds directly over to us. But they would not just let him
Release
transfer his
funds,
money
yeah.
over. So there's been
Crazy.
some very creative situations, and we've learned a lot. We think we need to start writing a book soon, but we've learned a lot just about, a lot of these people are more than qualified to purchase homes.
Absolutely.
They just don't have an avenue to do that. And so that's where we come in. We try to just educate you guys as much as we can so that you can open up, your pool to more buyers. From what we've heard, there's less than 1% of listings on the MLS that offer owner financing. So if your listings don't, we encourage you guys to put that on there, alternative financing available, and we do think that it will help get your buyer pool up. The realtors that we've worked with since we started working have been repeat realtors for us, and they have these people lined up, and now they know that they have a solution for them. So just keep us in mind, and if you're talking to your colleagues in other places, and they have someone, definitely keep us in mind for those referral fees. And thank you guys for having us today.
Well,
One last
we
question.
have a event on March 25th. We call homeownership, keep it and rent, and we do
I think you
workshops.
told me about this.
We did one at the Missouri City Library, and we go around the city. So the March 25th one will be on the northeast side at a community college, and we have
that's
consumers that are there. But most importantly, I think at least 2 builders that have committed to come. So what we're trying to do is expose the participants that it's different ways to buy a home.
Right.
That's
We'd
great.
love for you to be able to do.
We
Kinda
can't,
like-
he had told me about that already, I think. We can't make it on the 25th of this month, but moving forward, yes, that is a perfect event that we would
Well,
love
we
to be a
have
part
one in
of.
April, we're just waiting to lock down the date.
Okay, yeah, please let us
Send-
know.
Definitely
We would
email us
definitely
the
like
information
to
on
be at
April
that.
But we'll take
Yeah.
the information that it exists and look at trying to, that's the thing about getting it. You gotta have things in your toolbox.
Right,
So,
Right.
right,
So
yeah.
what I heard, and I apologize for coming in late, is that we can use owner financing on our listings that are in good shape. Not our listings that are tore up.
Right.
But our
Yes.
listings that are livable.
Our houses they will have to appraise.
Yes.
So for
Yeah.
fix and flippers and stuff like that, if the house has already been fix and flipped, we can help with that. But
Okay.
we're not working with investors who are looking for, discounted properties.
Okay, so I heard 2 things in my short one to hear, but he kind of informed me. So using this, having a button to say on the listings that it can be on finance, and then when they call about on finance, we turn them to
To
you
us
guys. for
to
them.
get pre-approved,
Yep.
and then you guys,
Pre-approved.
and the pre-approvals, we can do them in 24 hours.
Okay.
It's pretty
and,
quick.
And then in terms of my seller, he get his money, they get their own finance, and
Yep.
off to the rest of the
Yep.
Right.
So that's one scenario. But then I have an increasing number of, I say my young millennials who, I say East Coast is here because they're looking to buy, and there are some new duplexes out here. And the duplexes are running 350, 325, some of them go, but they
That's
at
a
least
good
350.
price.
So they want to buy on one side and rent out the
House
other
hack.
side.
Yep.
Mhm.
So if they have the cash to do their down payment, then that they can actually move in their situation.
Absolutely.
Yep.
That's
So you can
So the
actually
fact that y'all was
run
saying that at the
cash.
same time, no.
Yeah,
You
we've
said
had
just take
a
a picture of the
we've
stacks
had a
of-
buyer pay 100% of everything in cash. She came from
Nicaragua.
She was from Nicaragua. Hmm. Yeah, she's bought 2 houses from us at this point.
Yeah.
One of them all cash, the other she had
She
money in
have
the
a
bank. She's the husband.
She,
Oh,
yeah.
A realtor?
No, a realtor.
Oh, I thought you said she had a
I know the
boyfriend.
money.
Yeah.
She does. She does
Yeah.
have a realtor. He's yeah.
He was one of our first realtors that we worked with.
Mm-hmm.
Yeah.
Okay.
Yeah.
No, that's a real thing because that is a lot of people want the multiple streams of income. So
Yeah.
they're looking for the places that they can live on one side and rent out the other side.
Yeah,
I mean,
it's
in
actually
that
such a
case,
smart idea.
even with our high interest rate, I think in a situation like that,
Yep.
they would still be able to make it work because they could use that income from there
Obviously,
to. I mean,
yeah,
even
to
if it
cover the
doesn't
mortgage
completely
payment for
cover
both.
it, they could keep that going for that. I
Right.
think that would be a better
Mhm.
scenario than say like a fourplex.
Mm-hmm.
I feel like a duplex would make a lot more
You
sense.
guys service loans only here in Texas?
For now, we will be expanding into Florida later this year, God willing.
Okay.
Is your guys' company?
Mm-hmm.
Oh,
We have
awesome.
one other partner, Mark, and he's been in the industry for, at this point now, it's like almost 30 years. So he's done everything from build neighborhoods to hotels to
Owner
rentals,
financing on his
owner
own.
financing. He
Fix
also
and
owns a
flips.
lending company that does like hard money type loans. So
Okay.
yeah, so he's another outlet for, we have a lot of investors or buyers who we can't necessarily help them maybe, like for some of those fix and flip, but he can, so we can always refer someone for that.
Yeah.
And for the fix and flippers, if any of you guys do that type of thing or have investors, they can stick a sign out there, a bright yellow sign saying owner financing available, and already start getting those buyers vetted so that when it's ready, like we have them pre-approved and they can put their offer in right away.
We do also have, we're working on our website right now, which should be done about the end of the month.
Yeah, we're
beginning
launching
of
at the
next
end of
month.
March. Like we
Yeah.
have one, we just hired a team to recreate it, so all the information's still on there. But
Yeah, we have a
Except
website.
for-
which-
Or
But,
referral link.
that's a good idea, referral link.
that's a
But
good
what we
idea.
are gonna have on there is a page of just homes that we do have in inventory. And basically what that page is gonna be either homes that like our partner Mark fixed and flipped, or other investors that we just like know really well and work with that they fixed and flipped. And those houses will just be like 25,000 down, like all in. So they'll have to pick from an inventory, but it's gonna be awesome. We're gonna have basically just like a map of Houston, and so they can go to that and just see exactly where the houses are and what parts of town. So, and then just like click on the side to get all the details. So that'll be cool if you do run into any buyers that don't have, the 15 to 20%, and maybe they just want to be in a specific part of town, but are willing to choose from like an inventory of houses. We're gonna have all that on there as well. Which we do have those houses now, but it's just gonna be
a lot more.
a lot nicer and easier for them to look at, read, access on our new website.
And when is this starting?
Well, we have houses now. If you do have any like buyers right this minute, but it should be our
The end
website
of
should be
March.
done into March.
At the end of March. Yeah, but we do have I think 11.
Like 10.
Yeah,
I was gonna
10
say
or
10
11
houses.
properties. One's in LaPorte, a couple are in LaPorte.
Just one in
They're all kind of
Over
all
by
over.
Sugarland,
So I
like-
think maybe one in.
Do y'all do condos and townhouses?
We do condos.
I know,
but
I know.
oh, the condos. We have
Yes,
we do
to answer your
condos,
question,
but
we
it's
do.
just I don't know. Those we might.
Yeah.
I think moving forward with some of those, it's probably going to be additional down, like regardless of the purchase price.
On a case by
You know,
Because of
Yeah.
this, okay.
And you don't require an appraisal?
Yes,
We do on everything.
The lender will order the
For
appraisal.
the homes that we have in inventory, no, like they've already gotten appraised just in the last couple months because they've been like fixed and rehabbed and all of that. So those will have recent appraisals on them all. For like the closing for those ones, we can close those ones in like as little as 10 days, like as quickly as they can get through the RMLO, we can close those ones. So we don't have to have appraisals on those.
Oh, is this a desktop appraisal or they go actually out to the front?
They go actually out. Yeah. Those are the ones we've done.
And you can purchase a property. It don't have to be like inner city. It can be like out.
Oh yeah, anywhere.
Yeah, we have properties in Livingston.
I mean, all over the
all
place.
over the
San
place.
Benito,
Mandel.
Texas, outside Dallas. Like, that's
Yeah.
one of the reasons that we have to still use traditional investors that don't go under LLCs, because a lot of, LLC loans, they won't do rural properties. So we have, traditionally, they're fine, but, like our investors who only wanna do properties under their LLCs, we can't put those rural properties under those investors because they don't do rural properties.
So you can buy a property in your LLC?
Our end
Yeah, our
buyer
end
can,
buyers.
or our investors, yeah, either
We've
one.
had our end buyers do that a few
Yeah,
times.
we have.
Mhm.
So, I know you had a couple more, John, so the summary of it all is that.
I'm gonna give him the summary.
Yeah, I think you did a great job.
Well, who's gonna have the presentation? Who y'all sending the presentation?
We can send it to all of you guys if y'all wanna give us your cards, or if you wanna give us everybody's, yeah, we can email it to everyone.
Well, school is never my favorite. Keep it
Okay,
simple.
okay, Gail, you said you're doing the summary, I'm listening.
Right, so anybody who has a buyer who has 23% of the purchase price down, they're gonna do the deal.
Correct.
At 10.99.
10.9.
10.9.
10.9 interest
With no
rate.
penalty,
For
for
how
bill
long?
5,
Is it 30
Yep.
years?
30
30
year
years.
fixed.
fixed, yeah.
That's
we
it.
look good.
That's it.
And then they can
Okay.
refinance.
So since we got everybody
at any
here,
time.
let's
That's
start
it.
looking at some property.
Let's ask questions.
Let's make it happen.
There you go.
Yep,
2,
that's
3,
it.
4, 5, 6, 7, 8.
So any of your buyers that don't qualify, traditionally, we can help them.
But the other.
So are you good just for the city of Houston, or?
All over Texas.
All over Texas.
Yeah.
And expanding into Florida later this year. All they need is a valid ID or passport from any country and then proof of funds. So if they're looking to figure out how much they can afford, they just need to multiply whatever that purchase price is times 23%. As long as it's not over 350. If it's over 350, they need to multiply it times 28%. We take an extra 5% down if it's over 350.
Towards the down payment, not in fees.
So we can find those duplexes that are under 350 and under. You can send it to a person who's looking to buy that house and buy one to live in.
Absolutely.
And rent on the
It
other
can
side.
be 350 and over, they just have to bring an extra 5% down toward their down payment.
Okay.
She's looking to stay, I think you're looking to stay in the 15%? Is that your buyers?
That's doable for them.
Yeah, it's a lot once it
For the
starts
first,
getting
cause some
higher.
of these are first time home buyers, but this is what they wanna do.
Yeah,
They
That's
want,
smart.
they
That's
want
very
to do
smart.
the investment, and
Yeah.
so I'm working with a couple of people that's building some duplexes now.
yeah.
So I'm gonna try to go in and secure the listing by saying I can cash them out with the owner finance.
Absolutely, yeah.
So the properties that you can't do that are rural, is that over 5 acres, even if it over 4 acres, even if it has a house on it?
We
We
can
can-
go to,
it's
what
like
is it?
20.
20 acres.
20
Oh, 20
acres.
acres.
Yeah.
As long as it
Yeah,
has
we
a
have ranch
house on it.
houses that we've
Okay.
done with like lakes on them. Like
Okay.
our biggest house to date is what was the offer? 2.8 million.
I don't know what they ended up selling.
I mean, with like that, it's in Hoffman, Texas, with like
Yeah.
with a
Yeah.
boat dock and lake in the
George.
back. Gorgeous home, but yeah, we don't have a cap. We have investors who can go that high, and then if our investors don't want a deal, we keep the deals in house. So, and then Valerie and I are also investors along with our other partners, so we keep a lot of the deals for ourselves too. We have a separate company that we do our deals in. So
So
We-
really rural is really, if it doesn't have a house on it, it's just land.
That we
What-
can't
we
do.
can't
We
do
don't
raw
do raw
land.
land.
It does
Okay.
have to have a house, and it can't be like a garage or something.
Right. It
Like,
has to be a
'cause it-
livable
Yes.
dwelling.
No barnuminium.
Yeah.
Right.
No.
Well, we did actually do one that was a barnuminium.
We did have a barn
But the barnuminium was just, it was really, really big, and so it wasn't like this tiny little structure with a huge garage on a huge thing. It was like a big, huge barnuminium with like a normal garage, and so they like considered it.
And it just said there's some houses that are in areas where they're deemed commercial because
Yeah.
they'll have like a workshop or
Yeah.
something. Those we can't do either because it does fall into the commercial. And if you guys have a property that you just don't know what if that's gonna fall into, let us know. And what we do is we just run it by our lender before you guys go get under contract and all of
Yeah.
that. So just give us a call. We can talk about it.
If you just explain those 3 closings, I just don't understand why there's 3 different closings.
Yeah, so the first closing is the investor making that first purchase. That's the title company closing. So that's where everyone gets paid. That's where the seller gets paid out. That's where all the realtors get paid. That's where our investor purchased the property. The second closing takes place at our office, just with us and our closing attorney. That's where the investor sells the property to the owner finance company. And then the very next day, both of those closings happen on the same day. And then the very next day is when we do the third closing, the ones where it's your end buyer's closing, where we are selling it to your end buyer. Yeah.
And so all those closing costs are carried over to the final closing, or we pay?
And they're included in that 3%. So technically the closing costs are split between the investor and the end buyer. That 3% that we estimate includes all the
covers
closing
all.
costs,
Okay.
associated that your end buyer is gonna have to pay. Our investors are responsible for paying the loan origination for their closing.
Okay.
But that's what I was saying is about like 2 to 2.5%.
Which is
Yeah.
covered in that 3% total, right? So when they get ready, when everything is closed, basically the buyer ends up just paying like 3% of whatever the purchase price is.
That's what that's what
Yeah,
it's about
most of
average,
them.
which is why we do that for the
Okay.
proof of funds purposes. It's like, that's what it normally, taking into consideration the remaining closing costs from that first closing, and then the closing costs that get added on for their actual closing, like at our office, that estimates out to usually about the 3%. And that includes like their escrows and all of that.
Oh, it does.
Yeah,
Yes.
yeah. It'll be just like the same type of closing costs that you see on any normal like closing.
So now when, so for a new home, a new build, if it's not complete, you know how builders take 90 days, 60 days to build out, you can go on contract with this type of financing now?
Typically what we'll do is we'll work with the builder. We'll have the buyer go ahead and bring us the $5,000, and then we'll work with the builder. We're upfront, have communication with them and let them know, hey, as soon as you're about 30, 45 days out from it being complete, let us know. We'll get an investor assigned at that time. Because the thing is, we can't put an investor on it because once that loan process started, it's gotta be ready to do the appraisal, basically.
Okay.
So,
But the buyers can put down money, like
right,
they can bring
and
it
put
to
down
us
EM
to hold
with
the
the
property.
builder. Usually that's what they'll do. The builder's good with it as long as there's EM being put down there to move forward that way, and then they'll bring it for us, and basically we secure them an investor to make sure that when the time comes, there's somebody ready to go for them.
Happy money.